Today I'm going to be looking at a lot of stocks that people have asked me to. Apple, Microsoft, TRAC, Tesla. I'm going to try to go as fast as I can. I get caught up just talking about the methodology of Elliott wave analysis and how Bulkowski chart patterns a simplification of that, and how when I do go through YouTube and watch other retail traders do analysis, I'm kind of underwhelmed that people are seeing the charts the same way. I think actually, after looking at StockEd's AMC analysis, is that this is also a three-wave mode through here, 1, 2, and 3. What this implies is that AMC is not making any progress over the long term, and that's crazy. Like, oh look, $72. Yeah, in a corrective form, not in a motive mode. And when the price did reverse, it came back down to like 3. It could be very possible that what we're seeing here is these meme stocks may move through correction forever. Can you imagine? That would just wreck retail traders, and they could run the market like that, or I should say the market could be ran like that, such that you have these stocks in which the price just swings wildly all the time. Like, imagine another three-wave move coming up to all-time highs, right? This would be insane. Oh my God. And then guess what would happen? The price would just drop again. And it would be the same story over and over and over again. But in every uptrend, you're going to have a media campaign that just drives FOMO crazy, and you're going to have a lot of people that make a lot of money. Like me. I made money trading AMC. I did a lot of buying when the price was towards $8 or $9. And I did a lot of selling when it was above 50. And so here I am looking at the meme stocks, generating content about the meme stocks, and here you are watching my content about the meme stocks, and that's going to be creating a market for meme stock trading, which we know is profitable because of profit order flow. So put those puzzle pieces together. Maybe some of these stocks have actually been, I want to say, abused or misused in order to profit from these business models that we know don't help the little guy. Anyway, so let's get going here. We have what appears to be X, Y, and Z playing out in Tesla. It's possible that this is X, this is Y, and we've actually had a bottom, right? We won't really know until we can pass a prior peak or valley that will signal that is true. Until the time being, though, I'm actually calling this, whoops, I mislabeled that. I'm calling that first move down X, the bounce from there Y, and this was a reverse triangle, an ascending broadening wedge. And then I think, is this really Z? It looks like this would imply that the price has found a short-term bottom. I'm very cautious though about being bullish on the markets. I do think we are going to go in for a sustained drop. It's very possible too that Z is actually going to be down here. And what I can do to try to understand that target is just to take the first leg of that XYZ pattern, the ABC correct move down, and put a projection. I mean, a full measured move was at 114. We did find support there and pull up. If the price continues to fall down, it will form a motive mode, and that would be interesting. The first wave of that motive mode would be that 100% extension at 114, and this would be wave 2 are forming. Volume here going crazy. Look at this volume fueling this going higher. X, Y, I mean Z. Yeah, this looks like it could have bottomed, which drives me nuts because I think the markets are going to go down. But it's possible I'm wrong, right? There's always multiple wave counts that could possibly be correct. Going into Microsoft, I think I see a similar thing. Check out this extension I'm going to draw. I'm going to go down to the bottom of wave X, pull it up to the top of wave Y. And where's this extension fall? It comes down to 192. Microsoft has not gotten there yet. It looks like maybe we are beginning another three-wave pattern inside this wave pattern, and there's one more leg, and it's down. And maybe this completes the corrective cycle of Microsoft. I wonder if I can take that with a grain of salt and go into Apple and see something similar. Waves A, B, and C. This could be the first Yeah. So, oh God, I'm just trying to find the analysis that supports my drop in SPY because I'm pretty confident that we're going to have another drop in SPY. If I pull this up, say we've already reached that peak, then 100% at 104. Yeah, so Apple and Microsoft, to me, look like they could still continue to move lower. Meanwhile, Tesla seems to be an exception and not following that same trend because of how hard it fell earlier relative to Microsoft and Apple. So if we are going to see a continuation of downtrends in the market overall, but Tesla's going to withstand that a little better, guess what? We probably get some sort of super annoying triangle. This is just guesswork, okay? I know people love it. I typically don't like to guess, but sometimes I do. Maybe Tesla rolls around here for a while and just wrecks options traders. I mean, if you're long on options, you could run. Honestly, if I had the money to, I'd probably run an iron condor through here. It'd be a really tall range I'd be using, but I would do it. I totally would. So Apple, Microsoft look like they could go down further. Tesla's probably going to enter into a consolidation pattern. Now, the dollar. I did want to go into the dollar before I get to TRAC. And I'm going to need to put a dollar sign before that. This is an index, not an equity. So it's a little different. I'm going to try on an hourly chart. You're going to see that, like a lot of other people, I have a falling wedge drawn. But actually, I've pulled it all the way back to this high from November. It's bigger than the other falling wedges you're seeing other people drawing. And the reason why I do that is because I think that this is the best way to express wave C of an ABC correction. Elliott waveform analysis can really help you guide those chart patterns because if you get a fractal, you're going to find that there's a lot of different possibilities. And you're also going to notice something else too, and that is using a line chart cleans up the charts a lot because you're only using the close for the analysis, not the high, the low, and the open. Those price swings intraday can be driven by day traders, like myself, but also they can be expressions of earnings. And those outliers in the data, when you filter them out, you get a line chart, and it's a little easier to understand. Now, this is a very complicated chart. It really is. And I did forecast a bounce with this in the dollar, and we've been getting it. You can go back and watch my video. The dollar bounced from hell. We're getting that breakout. And if we continue to move higher, then I'm going to need to have some targets, which I have here. I'm going to zoom in on this little itty bitty three-wave move. The corrective uptrend will start with 3 waves, and if we get a clean measured move up, I'm just going to take my points here and make them a little more precise. On the hourly time frame, the target's going to be 105, and if we see 107, we're going to be calling it motive, and we'll be expecting a retracement and another shockingly high push. So that's a little ahead of myself. For now, we're just looking for 105. And this is kind of why I'm bearish on SPY, is because if the dollar rallies, then equities will suffer. And that is a correlation I can't explain, but appears to be true. When the RSI moves into overbought like this for an extended period of time and reaches a very high level, 80 is a good spot to draw that line. This I would call a kickoff in the RSI. This is the averages pushing much higher than they've been, and that occurs because you have this really flat extension through here. So the price range through which, or the price levels, it's not really a price, it's a dollar index, but the index levels here are becoming very, very stable. And what that does to the averages is it makes them very small. And so when the price does make a more pronounced move, the RSI goes crazy. So I call this kickoff. I think that's actually a Frost and Pretcher term. I'm referring to a book. Maybe I'll show a picture here of the book. So I think the dollar really could still be rising. And the 50% retracement level from that downward push is up at 107. That's very near the 161.8% extension of that first initial actionary wave. An actionary wave is the first wave that agrees with a trend. And we get a trend when we get a series of highs and lows. In order to do that, we need 3 waves. And we have the first 2 here. The third one is shaping up, but we won't get a confirmation until we break this high at near 104. Let's see what it is. 103. Yeah, 104 is a good level. If the dollar gets above 104, then look out. It's probably going to rise more, and that'll be bad for equities. Now, I don't know what track is. I've never looked at it. So we're just going to go have a look. Oops, no dollar sign. OTC, huh? Interesting. Okay. I'm being asked to look at something that's traded just over the counters. markets. That's a little different than like on an exchange. And can I not get like, what? This is weird. I guess I don't have any data. There's plenty of data right here. So why can't I get like an hourly chart going? What? Okay, so it looks like it only trades every so often. Every once in a while there's a trade pushed in here. See, I don't understand. Is this the right symbol? I don't know.